how to calculate AMTI, Alternative Minimum Taxable Income, after the exemption amount. This is my today's topic. No one is better than you, rather than you have yet to make a commitment. Hence, make your commitment now. This is my message. This is Nashima, the CEO of InfoTaxSquare.com. Professionals and students who want to enhance their knowledge should sign up with GLIME as I suggest. I also request that those who watch our videos subscribe to our channel to receive up-to-date taxation information in their email. Why should you subscribe to our channel? We are a team of CPAs and EAs who develop content based on Congress Internal Revenue Course and IRS publication. I'm going to explain it with an example. Kendall, a single taxpayer, has a regular taxable income of $87,000. She correctly excluded from her gross income the exercise of incentive. Here is an important point. She correctly excluded from her gross income the exercise of incentive stock options. Using these stock options, Kendall paid $6,100 for stock with a fair market value of $26,000. The alternative minimum tax AMT exemption for a single tax filer is $85,700. What is Kendall's alternative minimum taxable income after the exemption? The alternative minimum taxable income and the alternative minimum tax are calculated in the following order. Number one, begin by identifying your regular taxable income from your tax return. Number two, include adjustments and preferences that are not eligible for alternative minimum tax deduction, such as state and local tax deduction, personal exemption, and interest on private equity bond. Number three, add back adjustments and preferences. Include items that are not deductible under AMT rules, such as state and local tax deductions, personal exemptions, and interest on private equity bonds. Number four, adjust for AMT preferences. Add income item tax under AMT, such as the bargain element on incentive stock options or accelerated depreciation. Number five, calculate AMTI, alternative minimum taxable income. Add the adjustments mentioned above to your regular taxable income. Number six, subtract the AMT exemption amount based on your filing status. The exemption amount for 2024 is $85,700 for single filers and $133,300 for married couple filing jointly. Number seven, and the last point, calculate the TMT. Apply the AMT tax rate to your AMTI after computing it or after taking the exemption. In 2024, the first $232,600 will be taxed at 26%, and the amounts above that will be taxed at 28%. So we have the data here. Kendall has a regular taxable income $87,000. And we also have the exemption amount, which as a single filer, which is $85,700. She excluded her ISO basis, so we have to include it in the income. So ISO basis was $6,100, and the fair market value was $26,000. And the difference was $19,900 by the exercise which she excluded. We have to add it back in order to determine AMTI. So her regular taxable income was $87,000, and she excluded from her income $19,900, which has to be added back, and we will have an AMTI. $106,900. We have the exemption amount before calculating the AMT amount. So AMTI $106,900 less the exemption amount, since she's a single filer, which is $85,700. So AMTI after the exemption will be $21,200. Thank you and God bless you.